Welcome to the B.F. Anderson Techno Fundamental Report for June the 15th. We think the train is leaving the station. We think things are starting to improve. We're seeing very much of an improvement in our indicators. Now remember, these indicators are nothing more than observations, so I can only tell you what I see, and what we're seeing is positive. Now, one of the points I wanted to make here is that you've got fear and you've got greed. This is about a year and a half, 2 years of fear. If you go back to the '08 bear market, it was a very long period of time. This one's been a doozy, but what's important here is that last week's survey went to a plus 20. So that's the first positive reading on sentiment in a long time. So is this just the beginning of a period like this? Well, we hope so. But then again, this will possibly show a little, this is a contrary indicator. So, basically we could have a pullback, wouldn't be surprising. The difference between a republic and an empire is the loyalty of one's army. Julius Caesar. Caesar's army, the Romans, never retreated. And they were always loyal to Caesar. Basically, what I'm trying to say there is the word loyalty. Also, the word consistency is important. So when you adopt an investment strategy, you need to stick with it because consistency is important. Now, when you go into a bear market, it's a battle. It's not fun. It's hard. And so what happens is you need to have made enough money in the prior bull market to be able to battle with a cushion the bear market. So loyalty to your strategy is important. Warren Buffett, risk comes from not knowing what you're doing. Think about it. This man has been investing for 90 years. He made all of his mistakes as a young man. So he now knows what he's doing because he has a definite strategy that he is consistent and sticks with in good and bad times. In this business, this is Peter Lynch, in this business, if you're good, you're right 6 times out of 10. You're never going to be right 9 times out of 10. I would also go on to say is that not only if you're good, but if you're in a bull market, because in a bear market, Peter Lynch pretty much in his book talks about something called the hit ratio. So if you start getting into a situation where a majority of your portfolio is losing money, it's telling you you're in a bear market. William O'Neill, my philosophy is that all stocks are bad. There are no good stocks unless they go up in price. If they go down instead, you have to cut your losses fast. Letting losses run is the most serious mistake made by most investors. If you're wrong, and also Jesse Livermore talks about this, who was a famous investor back in the 20s. Basically, if you're wrong, the key to the game is to cut your losses as quickly as possible once you know you're wrong, and there's ways to do that. Bernard Baruch, if you have made a mistake, cut your losses as quickly as possible. So, again, just trying to say, one thing about a strategy that is so important is risk management. So you've got to keep your losses under control. Do not let a stock go down 50%. Because then you got to make 100% to get your money back on something else. Harder markets are typically followed by easier markets. Okay, so here back in the 80s, the early 80s, high inflation, Paul Volcker ran interest rates up to 20%. Hard market, very hard, but then followed by an easy market, okay? There's 2 bear markets right there of 2000 and '08. Difficult market followed by an easy market. So here we are now. We've had basically a 2-year bear market in growth stocks. Hopefully we're going to see an easier market now. So when you look at your indicators, you have to do something called weight of the evidence, which is where you look at all the factors that you can and make a decision. So let's look at where we are right now. We believe the market has now gone into an uptrend. This is an uptrend in the S&P starting in March of '03. And that was the bottom. March 10th was the bottom in March of '03 after the dot-com crisis. You can see here Apple, this is Apple back in '03. You got a major buy signal here. A lot of volume came in, and you got what you call a gap up buy signal, which was then followed by a period of consolidation and then we went into a very strong and powerful uptrend. Apple's been a really good one. So I also wanted to make a point about oil. Oil is really in a downtrend. So if everybody's really worried about inflation, I've always found that oil prices and inflation tend to really go in hand with each other. If you go back and look at the 1970s, for example, back during, you remember all the gas lines and so forth, hyperinflation. But as you can see here, the price of oil is really dropped off and is in a downtrend. Just something, another indicator of something to think about. Now, this is good news here. This is new highs on the NASDAQ minus new lows. We're getting the highest reading on this indicator. See, above zero means that we're making more new highs than new lows. This is a very positive sign. And we think the market is going into an uptrend. Here's the 200-day moving average for the S&P. Looks like an uptrend to me. Here's the 200-day moving average for the NASDAQ. So we think we're in an uptrend. Well, just hopefully we're right. Another indicator that we would just absorb here would be the aggression index. This is where we're comparing NASDAQ, mainly technology, to consumer staples, things like toilet paper and so forth. This is an interesting indicator. It has worked really well in the past for me. But if you go back and look at the year of 2020, you got such a major up move, but then you're going to get these wiggles in there and then another major up move. We may be just at the beginning here. This is important. Okay, just to look at some stocks that I just picked at random. Now remember here, just like in the Apple example, you're looking for an uptrend in the market, and then you're looking for the buy signal on the stock. So let's go back to the stock we're looking at. ServiceNow, which is a software company. You can see here that the buy signal really pretty much came in here fairly recently, where it broke out on really heavy volume. You see the blue line here is average volume for the last 50 days. Well, when you're getting major amounts of volume coming in, it's just telling you that there's institutional buying here. And you can see that this stock is really going into a nice uptrend. I'm seeing this more and more. Let's look at one more. Here's NVIDIA. This has been in the media a lot. I'm actually looking at it for myself, but the problem I have with NVIDIA, to be frank with you, it's now a $1 trillion company. We first started investing in NVIDIA back in 2018 when it was a much smaller company. But anyway, here's the buy signal. You've got, look at this major volume that came in with the announced earnings. We've gone through a little bit of consolidation here, but it's turning back up again, and we're really getting some nice volume. So hopefully we're right. We think things are starting to turn positive. Call me if you have any questions. Thank you very much.